Hurricane Michael slams into Florida and Georgia. ATA's Bob Costello says trucking rates are plateauing, but the market remains strong. The Dow Industrial average drops 800 points in a day. But despite the transport sell-off, Stifel reiterates its buy rating on C.H. Robinson. I'm JP.
And I'm Zach, filling in for Chad.
And we cover all these issues and more on this week's episode of What the Truck. And we're also joined this week by FreightWaves Senior Meteorologist Nick Austin. Welcome back.
Thank you. Good afternoon.
And Zach Strickland. It's been a long time since we've had you in the booth. Welcome back, dude.
All right. Yeah, happy to be here.
Chad is, probably happy to be where he is too, in the Bahamas. So,
out of the way of any tropical activity.
I don't have a whole lot to say about that. I hope you're having fun, Chad. All right, well, let's get into it. We published a lot of stuff about Hurricane Michael, the very intense storm that started off the Yucatan Peninsula, as a normal tropical storm. It was projected to, kind of hit, the U.S. as a tropical storm, but it didn't really play out like that. Nick, can you tell us sort of what happened, how this storm got so powerful so quickly?
It started like most hurricanes normally start. It just started as a tropical wave, just kind of a cluster of thunderstorms, like you said, down right near western Cuba. And one thing that hurricanes really like as far as development is heat. And this storm got strong really quickly because it was moving right into the Gulf of Mexico, and the surface temperatures in the Gulf, the water temperatures, even for this time of the year, are warmer than normal, particularly right along the coast of the Florida Panhandle. So that's one thing that kind of helped fuel this storm a lot. And, it didn't have a long way to go compared to, say, Florence. So the weather, the Hurricane Center was able to keep its eye on it and really track it pretty easily. And they got the track almost
dead on,
spot on as far as where it made landfall.
Too, right?
Florence was a little trickier because it started way out in the Atlantic, over by Africa. And
right.
They had a lot of time to watch it, but
there's so much shear and things in the way,
right?
At
different spots over, the vastness of that space over the ocean.
What I don't get is as soon as Michael developed into a tropical storm, even someone like me can log on and look at the sea surface temps. We
right.
knew that it was hot. We knew that it was 84, 85 degrees. So why were the early forecasts so optimistic about Michael not gaining that much strength?
Well, I don't think they certainly didn't think it would get to Category 4 strength or maybe even 3. They were projecting hurricane.
Right.
Maybe Category 2. But then, because the waters were so warm, and you mentioned shear, that's another thing, is when it first developed, it was in an area where there was some shear. That means in the upper levels of the storm, the winds were fairly weak. They weren't changing directions.
They were knocking the tops off the storms.
They were changing, right. Yeah. So it's kind of
sucking energy out of the system.
Right, and tearing it apart kind of.
Right.
But as it moved further into the Gulf, there was a lot less shear, so there's less of that happening. The storm was able to organize a lot better. It was moving over the warmer waters. The pressure was getting lower, and so then the spin just gets tighter around the eye when that happens. Kind of,
right.
Imagine like a figure skater out on the ice, and when the figure skater brings his or her arms closer in to the center of the body,
Sure.
It spins faster. And that's what's happening with this. So warm waters, a lot less shear over the Gulf as well. And the other thing, too, they noticed that right around the eye wall, there were some thunderstorms developing. They're called hot towers. They're very, very, very tall thunderstorms that release a lot of heat back into the whole system. And so that really energized the storm.
So would that be why it kind of accelerated growth so fast there at the end?
Exactly.
Like normally, I know I heard with Florence that as soon as it kind of got to the coastline, things started. There was a lot of friction with the ground or something like that, and then it just kind of tore the storm apart. But this one that didn't happen with this one. Like
right, and there might have been some shear too with Florence as well that helped weaken that storm, which was good because if I remember correctly, it was up to Cat 4 at one point when it was out over the ocean.
Yeah, right.
So, and the other difference between the damage that Florence caused compared to Michael, Florence, once it made landfall, was cut off from the jet stream. It was cut off from the winds that steer weather systems across the country.
Right.
So it was just stuck there for 4 days with nonstop rain, a lot of heavy rain as well. So that's why they had all the flooding. The wind damage wasn't really that bad. Mm-hmm. Michael was the opposite. Right. Michael's winds, I mean, you're talking about 155 mile an hour winds.
Yeah.
That was where that damages the infrastructure. That's what really did. There was flooding and storm surge, but because Michael got picked up in the steering winds ahead of a cold front that's moving through the eastern part of the country now, that's why it moved faster.
Right. Okay.
That's why it moved faster. And so that was good from a flooding perspective, well, even from the winds perspective, because
you don't want it to sit on top of you.
You don't want it to sit right on top of you. But that's the reason why their flooding problem is a lot more temporary.
Right.
Basically, that was yesterday.
Is the storm surge and then it receded.
Yeah, and it's not, the flooding isn't really lingering, but the wind damage is going to take a long time to fix. So
yeah, let's talk a little bit about the disruptions and the damage that the storm caused, and sort of what the aftermath is looking like, whether relief efforts are being able to sort of get into the affected area and do things.
Right. From what I've seen so far, there haven't been major problems with that, especially in the areas affected the most, which is Panama City, Apalachicola, Mexico Beach, where it made landfall.
Right.
And like from Apalachicola up to Panama City Beach, I think that's about a 50-mile stretch or so, give or take. So that's where most of the damage was concentrated, the heaviest damage. And I haven't heard of any problems of crews getting in there. A lot of them, whether it was military, whether it was FEMA, state emergency, other relief groups, Red Cross and stuff, they were already pre-positioned.
Right.
So they were already there. Now, there might be other crews, smaller crews, say utility crews, that weren't pre-positioned yet, trying to maybe come in from other states or other parts of Florida. I haven't heard of anybody having any major problems getting into those areas. They're having to clear debris, and obviously try and restore electricity from a little bit from near Pensacola all the way over to Apalachicola, near Tyndall Air Force Base, in those areas.
Right.
And over to Tallahassee even. I mean, from Panama City or from Pensacola to Tallahassee, I mean, that's a big stretch. Talking about almost 200 miles.
Takes a long time to drive that.
And there are about 400,000 to 500,000 people, reported power outages just along that stretch. South Georgia and Southeast Alabama have a lot of power outages. I think among all three states and even in North Carolina, there's about 800,000 or 900,000 power outage.
Wow.
Reports.
Have we heard any initial damage cost estimates? I think Florence was about $20 billion.
I haven't yet.
Okay.
But
I know it's a little early for that. But.
Right, and it probably is, but it's going to be bad. It's going to take a long time. Probably weeks to get the power back up. They've got to get all the debris, and there's a lot of damage to homes and the businesses along. I mean, there are locals that live in these areas, but it is mostly tourism,
right,
and things like that. So there are hotels, service industry.
I was reading something by our chief economist one time, and he basically was able to net the impact to GDP. And I think he said something about Florence actually had about a 0.1% impact to GDP, and it's a short-term loss, but it ends up being caught up, and then you gain that back in the months to come.
Some of the sectors do, some don't. So, if your local Home Depot loses power for a week, you're going to still replace your refrigerator. You just might do it a month later.
Right.
But industries like restaurants don't actually recoup their losses, because what happens is, if they close down for a month, you don't then go out to eat twice as much the following month to make up for it. So there are some kind of services that never,
that's true.
That get hit and don't make it back.
And so those are, kind of touristy. A lot of visitors go to these areas, so there are
and it was fall break
restaurants
up here,
and other things like that. And we were talking about this earlier, JP, that the luckily there's not a large shortage of fuel in the area, because that's necessary for successful relief operations. And so
we talked to Ned Bowman, the executive director of the Florida Petroleum Marketers Association. He said that while there was kind of a run on fuel before the storm hit, as expected, people sort of raid gas stations and grocery stores to stock up before disaster. He said that the fuel supplies in the Panhandle are adequate. He said that about 70% of the gas stations were operating fine. 30% were still offline, but the state is working to bring them back online as quickly as possible.
They are. And also want to mention, too, that the probably about 80 miles or so of Interstate 10 are just closed.
Oh, wow.
This is from US 331 over to the Apalachicola River.
Right, which is about, it's directly north of Panama City?
I think so, yeah. 330, I think that runs into Panama City. So that's a large chunk of I-10 that just you can't drive. I believe in both directions. It's all blocked off.
Yeah, there's not a good way around that either.
Yeah, there really isn't. In parts, there are sections of the Florida Highway Patrol reporting sections of US 98 too along the coast. Another popular route,
right?
Are either blocked or closed just because of debris. Maybe still a couple spots of flooding out areas that are flooded.
A couple other commodity disruptions that we're keeping an eye on. A few oil platforms were evacuated and moved out of the storm's path, shutting in about 40% of the Gulf of Mexico's oil production. And it looked like, Michael really did follow the track of a really heavily cotton-producing region in southeast Georgia. We don't have numbers on the actual damage to that crop. We know that it was in the early stages of harvest when Michael was making its final approach, and we also know that Michael maintained. It was so quickly moving, so it went across Georgia as a hurricane.
Right.
I mean, this storm is so quickly moving that this afternoon, Thursday afternoon, when we're recording this podcast, Wilmington is faced with the prospect of getting a tropical storm from the west.
Right.
Yeah.
That's crazy.
Yeah. It is. I mean, it's moving. The storm itself is near Charlotte right now, and heading up into Virginia, the Mid-Atlantic states, tonight and then early tomorrow, and then it'll just scoot right out into the Atlantic Ocean. But until that happens, parts of North Carolina, up into Virginia, could see some wind damage. Yeah, not like what they saw at the coast,
right? No, but 50-mile-an-hour winds will break trees.
That will definitely snap some trees, and it'll probably knock down some power lines. They could get some areas of flash flooding.
So this thing isn't over yet.
It's not over yet. It won't be offshore in the Atlantic until probably about early tomorrow morning.
Early Friday morning.
Off the Mid-Atlantic coast, right? Friday morning. And also, I talked. I don't know overall how trucking companies are doing. I talked to one. Am I allowed to mention it?
Of course.
Old Dominion.
Yeah.
I talked to someone at Old Dominion, and they have 5 operating sites in Georgia. 4 of them are not operating right now.
Right, they were directly in the path of the storm.
Directly in the path as it moved into South Georgia. So Macon, down Vidalia, a couple other spots. Also Dothan, Alabama, their operating site. Their one in Pensacola was spared for the most part, but it's only operating at 70%. Charleston's at 70%, so it is affecting at least
So we are seeing like major supply chain disruptions in the Southeast.
Yeah, and the LTL networks, a lot of them have those like kind of satellite terminals. So Dothan, for instance, is probably not a huge operating facility. And I don't know if they mentioned like anything about their hub for that region being disrupted. Normally, what they'll do is they'll have these hub and spoke networks as they kind of distribute out from it. And Dothan, I'm sure, is not one of those hubs. So it would probably be concerning to me if it were like, because the way that they route their freighter through these hubs, and then if you're out on one of the spokes, you're really not disrupting as much of the freight. I would assume Macon might be a candidate, although Atlanta obviously is.
Yeah.
And another thing Old Dominion told me was that they typically, ahead of these kinds of storms, they will move as much of the freight as possible to higher ground.
Right.
Interesting. Yeah.
That's cool.
So
interesting.
So that's at least the perspective from.
And Old Dominion is
from one company
widely thought of as one of the best LTL companies in the country. So they're kind of the gold standard. So they know what they're doing.
Exactly. Awesome. Well, thanks a lot, Nick, for filling us in on Hurricane Michael and all the aftermath. Zach, why don't we start talking about some of this economic data that the ATA's chief economist, Bob Costello, was talking about. Actually, you know what? First, we forgot to do this, and I didn't want to interrupt the very sort of grave, serious hurricane coverage, but obviously, I'm drinking a Bell's Two Hearted. What do you got, Zach?
So I was told that this has actually shown up on the podcast before, but I have a Tectonic Session IPA from Hutton and Smith, brewed especially here in Chattanooga for one of our favorite pubs, the Tremont Tavern, which has one of the best burgers in the area.
Nice, awesome.
Yeah.
How is it?
It's delicious.
Cool. Okay, so Costello says trucking rates are plateauing, but the market remains strong. We'll see about that. We've looked at declining volumes in October. I don't know. You read this article. Tell us a little bit about what the ATA's position is and kind of the issues that it has.
Yeah. So I mean, what they're doing is they're basically saying that rates, these trucking, the carriers are going to have the opportunity to get their 8 to 12% rate increases. And they think that they're actually going to have strong.
He's talking about for the upcoming RFP season.
Yeah, we're in the very beginning of procurement for how that kind of starts. We used to call it back in the day. It's bid season.
Yeah.
The shippers would send this out in October, November for contract implementation in the late to mid spring. And this is it's a pretty standard cycle because it's the time of year where everybody goes through this process of evaluating the prior year and budgeting for the next year. And not all of them operate on this standard October, November. We would get bids from your big players like Walmart and Home Depots and stuff. They would come out like when it best suited their cycle. And a lot of the time, the majority of them ended up in this October, November cycle. So what he's basically saying here, and I believe there was another guy that's quoted in here, is saying that they're going to have pricing power all the way into 2020. I found that to be
carriers.
Yeah, carriers to have pricing power. So that would be kind of unprecedented in trucking for carriers to have a 3-year pricing power cycle, like where the shippers don't have the leverage in the process, and that's a big statement.
Is he basing that just on data internal to the transportation economy, or is he talking about like macroeconomics?
He's combining the two, and some of the numbers he's citing are GDP, and everybody kind of knows that's going well. Most of the economy is still showing signs of strength, but I think the thing he's inferring in here that isn't kind of overtly stated is the fact that there's this market sentiment out there. Like we've now gone through this, year and a half year cycle of everybody's kind of got it embedded in their head that there's no trucking capacity.
Right.
The ELDs came in and like half the driving force left the market, and and all this stuff happened. In the meantime, they're buying trucks, and Class 8 orders are still on backlog, and all this kind of stuff. And it's, having seen, I haven't seen anything like this before where it lasted as long as it has so far. But to me, it's always been kind of a knee-jerk reaction, one direction or the other.
Exactly.
Yeah.
It's a stampede.
Yeah.
In either direction.
Yeah. I mean, you have all this flood of investment going on right now. So that, to me, because there's so little visibility into the industry itself, there's no holy grail that's going to pierce through this scene and let everybody know automatically what the capacity number is and whatnot. So I think that's also why rates, it's not a terrible statement to say that rates are probably looking good into next year. But to go out and say that's going to be good for the next year and a half is a pretty big move.
Yeah, I mean, it's one thing to say that, okay, I think it's indisputable that we've made a step up in rates, that we're in an inflationary period. The simple fact that wages are up on average, driver wages are up on average 12% year over year, that alone will bump the cost of trucking up permanently.
For sure.
So, that's one thing. But, I mean, the demand side of the equation is the most volatile side, and that's the hardest to predict.
Yeah.
And no one, I mean, a driver shortage one year looks like loose capacity the next year if the economy tanks.
Yeah, in 2006 or something, before the recession, capacity was an issue then. And then in 2009, capacity was an issue. It just wasn't like everybody didn't believe. They didn't really act on it. Yeah. They just said, well, we have trouble getting drivers. And that's true in the large carrier sector. That's always been the case.
Right. Right. I think the ATA has said that there's been a driver shortage 77% of the quarters since early 1992.
Right.
So, it just depends on how bad it is and what demand is doing.
Right. And the volumes, as we see, carriers, seeing as the industry, again, I hate to be so cliche here, but the industry is so fragmented out that nobody really knows what the other person's doing. So once the carrier starts having low utilization rates, he's going to go to he's going to lower his rates right away. They get scared real fast, and it takes a while for that to kind of gain momentum, I think.
Right, but then it's like a snowball rolling down the hill.
Right.
Do you think, not to be super cynical, but I mean, okay, the ATA is trying to convince the world that trucking carriers will have pricing power for the next 2 years. I mean, is there a bit of a conflict of interest here?
I mean, it's kind of implied. I mean, it's almost obvious, I guess, to me, that's kind of what their job is to kind of be the advocate for the big carriers, which is exactly who this is, impacting. I mean, they're a political organization.
Right.
So, I mean, that's their main job and main focus is to kind of gain awareness and to promote their cause. So, yeah, I think that's exactly one of the things they're keeping in play is kind of for the big carriers. It's you're going to get your 8 to 12%. For 2 years.
Okay. Yeah. So I think we kind of know where that's coming from.
Yeah.
Okay, let's go to our next headline. Just what the hell happened to the stock market yesterday? It seemed like equities were kind of going sideways for a while. Not a ton of volatility. But then what happened yesterday?
A huge drop. Biggest drop since May.
I think April.
Or was it April? Oh, it went all the way back to April. Okay, I didn't realize it was
ended
April.
Up dropping
800 points.
Yeah.
That was, that to me is a pretty tremendous sign. I mean, it used to be that you looked at the stock market as a leading indicator in the economy. I don't know if that's so as true today as it was, 10, 15 years ago due to the algorithmic trading. Everybody kind of programs their stop orders and you have these guys that have write code every day to catch momentum in the market. So I don't know. It's still big news. It's a big day.
It's 3% or over 3% loss.
Yeah, a lot of people's 401ks got hit yesterday. A lot of funds.
It's interesting. I mean, they're different. Obviously, if you were watching CNBC or Bloomberg TV or something like that, there were people talking about this all day long, speculating about the causes. I think Mariah Baker yesterday for us read an article kind of saying that, according to like traditional Dow theory, transports are a leading indicator of industrials, i.e., railroads, trucks, air cargo move the things that industrial companies make and also their supplies that they use to make things with. And so if those transportation companies aren't getting good business, eventually it's going to show up on the earnings sheets of the industrials. As far as I know, though, like earnings have been kind of strong.
They've been very strong.
Like a lot of this sell-off feels really kind of like people are spooked and people are anticipating. Like people are like even though there was like a long 2-3 month long sell-off in transportation equities that started with the Werner Enterprises Q2 results. And I think we've actually talked about this on the podcast last time you were on. Mm-hmm. It wasn't because of it was like because people were afraid that they had already reached the peak.
Right, and this is kind of this common theme. Like we're all trained to think that, everything has a cycle, every up has a down. You actually gave me a really solid quote not that long ago about how the bull market has no expiration date.
Yeah, they don't. Yeah, bull markets don't die of old age.
Or something like that. Now, I love that quote, but it's true. I mean, we all kind of just, at some point it becomes a self-fulfilling prophecy. The sky is falling. You know what? Eventually it will. Right. Once you say it enough, and the more you expect it, the more things start to move that way. And I don't know what started yesterday. I'm not that deep into the stock market.
Apparently, the tech stocks were sort of leading the fall. People were ditching tech stocks. One thing that people are saying is that with U.S. government bond yields so high now, there's basically a flight from risk. So people why if we know your equity, if we know the S&P 500 is trading at PE ratios that are well above its 30 year average. Why not sell equities now and buy bonds when they have high yields?
That makes total sense, but the stock market's funny to me because it's like the herd mentality, and for the stock market nowadays, like I said before, it's a lot of this algorithmic trading. So once they hit these stop limits, everybody's orders start clicking in. And then you have people just kind of jumping in on the pace of the day. So I don't think we lost that much value overnight. I mean, that's a lot of emotion and a lot of...
it wasn't based on fundamentals.
Right. No fundamentals in any kind of...
It's based on just where people want to put their money. There's a lot of money out there looking for a home, and people are shuffling it around.
Exactly. And I think there's a lot of smart people, too, that people are watching. And once they start making a move, then it's like, oh, wait, well... so-and-so's doing this, so, Warren Buffett's doing this, so I got to follow suit. He knows what he's doing.
Right. So interestingly, despite yesterday, I guess Wednesday's transport and industrials sell-off, early Thursday morning, Stifel reiterated their buy on C.H. Robinson, the North America's largest 3PL and freight brokerage. The target price is $106. Yesterday, during the sell-off, C.H. Robinson dropped 3.8% to $92.55. So pretty aggressive 12-month price target.
Basically, they're saying, go get it now at a discount.
Right, yeah. It's pretty interesting. I mean, Stifel, they had just hosted C.H. Robinson management for a series of investor visits and kind of had heard the executives there making their case about, sort of their growth proposition. And Bruce Chan wrote the report Thursday morning for Stifel. And, the way I read it came down to, kind of three basic things. One of the interesting things, though, that goes back to what Costello was saying and what we're talking about with, the way that volumes are softening a little bit and spot rates are definitely softening. I think you wrote earlier this week that national outbound tender rejection index, turndowns are the lowest they've been all year.
Yeah, we're starting to see some definite sticky signs of definite loosening of the market. Spot rates have come down significantly since their peak in June, quite a bit. I think we're probably about 15 to 20% off of peak value right now, and that'll it hasn't been super down since about the beginning of August, and so once we turn the calendar in October, the bottom just dropped out again. The volumes went down, and it looked like carriers' sentiment. So the tender rejections went down, which of course is kind of a indication that capacity is loosening a lot.
And Bruce Chan pointed out that this actually helps C.H. Robinson because C.H. Robinson, their mix of their sort of book of business is heavily weighted toward contract freight. So what that means is they're selling trucking capacity to shippers based on high contract rates, and then they're turning around and buying trucks for softening spot prices. So as the spot market deteriorates, their margins actually widen. So Stifel was saying that not only, if you look at the back half of 2018, is C.H. Robinson in a good spot, sort of in the cycle or whatever. Structurally, they also have a big advantage. They're currently, like I said, they're the largest 3PL in North America by a factor of 3. They have about 20% market share of all of the brokered freight.
I think it's fascinating actually because C.H. Robinson is definitely the oldest one out there in that model, but their model is not like all the other 3PLs. And in the 3PL sector is generally this group, these people that basically profit off of just volatility. Right. And C.H. Robinson is the exact opposite. They almost thrive on a more stable environment.
Well, yeah, and they're one of the few 3PLs that's large enough where they can really actually profit in a bear market because they'll still have enough loads where trucks come to them to find freight.
Right, because they have such an expansive network and so many connections.
And so what's interesting about sort of the brokerage marketplace is that so C.H. Robinson has about 20% market share, 3 times bigger than anyone else. But about 60% of the brokerage market is made up of tiny little companies with less than 1% market share. All of those people can be, essentially eaten up by either CH or Echo or somebody else.
There's a lot of consolidation.
At the same time, the percentage of total loads tendered that are being brokered is going up. So brokerage itself is growing the size of the pie.
Sure.
So Stifel really says that scale is sort of an exponential advantage in brokerage because of the network effect. So essentially, the more shippers you have, the more carriers you have, the easier it is for you to cover a load. But that advantage is exponential, not linear. And they look to be able to, they're in a good position to grow even bigger.
Yeah, that's fascinating to me. The fact that the more it makes too much sense when you kind of think about it in hindsight, because I guess you're just, I don't know, I've become so accustomed to this model of a smaller scale of brokerage. And like you said, less than 1% market share.
Yeah, right.
And then you have this behemoth.
And there's tons of them.
Yeah.
And I've covered a bunch of them. I've almost been on a 3PL beat lately. But it's crazy, especially in the past 5-6 years, how many small to mid-size, very successful brokerages have sprung up everywhere. A lot of it has to do with capacity constraints, but we're talking even before 2017.
Sure.
They were growing fast in 2012, 2013, 2014.
Yeah, it seems to be relatively, I don't want to make light of it, but it seems to be relatively easy to kind of start up a brokerage, and not from a work standpoint, but from a kind of getting investment standpoint. They kind of seem to be able to really get the initial capital to get going pretty quickly.
Yeah, Arrive got a venture fund. I've talked to some venture funding. I've talked to some people who basically they said all you need is enough money to get McLeod, and you're like good to go. And I think what makes it easy to start a brokerage is that there's no real barriers to entry.
Sure.
The one thing that is tough is if you have like a brand new authority number. Like you get hung up on a lot. Like
you don't have
if you have an authority number that starts with a 9, like
nobody wants to deal with you.
Yeah, and so you end up having to pay people half up front to move loads and half when they bump the dock on delivery, and take some risks like that to start building up some business. But other than that, I mean, I've just seen it so many times. Like it's a couple guys, and the next year it's 15 guys, and the next year it's 40, and it's just like
120.
Yeah, and so. But kudos to them. I still think I don't know. I felt that both Stifel's argument about C.H. Robinson and also the Goldman Sachs' comments about the 3PL were pretty convincing. I mean, they're here. They're big. They're 800-pound gorilla. They're not going anywhere. They're probably better at building technology than any of the smaller guys. And it'll be interesting to see how they ride out this cycle as it matures.
Right. Yeah, that's fascinating.
All right. Well, I think that does it for this week. Thanks again, Zach, for filling in for Chad.
Yeah, this is fun. I like it every time.
As always, we go into more detail about each of the topics we've talked about today on our website, FreightWaves.com. We will continue to publish this podcast weekly, so be sure to subscribe to What the Truck on Apple Podcasts, Google Play, Stitcher, and SoundCloud. Also, make sure to leave us a review to let us know what you think of our new podcast.
And if you're interested in freight economics and finance, come to our Market Waves conference at the Gaylord Texan Resort and Convention Center in Grapevine, Texas this November. Visit marketwaves18.com to learn more about this event.
That'll do it for today. Thanks for tuning in, and we will see you next week on What the Truck.